Rakshat Kapoor, though, joining us, Head Private Credit and Chief Investment Officer at Motilal Oswal Alternates. Why is this conversation relevant, viewers? Well, there's so much happening in the private credit market globally. Rakshat, put this into context. Is this a ripple effect of everything that's playing out globally, or was this a bubble just waiting to burst, or is it a bit of both? And what exactly is happening? Give us a perspective.
So good morning and thanks for having me.
Very good
I
morning.
think what we are seeing is in West, I think it's a fairly matured private credit market, and I think the if you look at the size of the market is anywhere $2 trillion plus, right? And I think any asset class, any markets which has sort of grown that size may have some some assets which are not doing well and things like that. But I don't think so. It's a systemic risk. And I also don't think that that entire asset class that we are probably thinking that in the West, especially around US, citing these two funds which have sort of restricted these redemptions in any way pose a contagion impact, or for that matter, any ripple impacts to developing markets, and that too in context of India. So I think this is just maybe one off, two off, and few situations that may just sort of very case specific. So it's not from an asset class perspective. So I don't see any risk from that perspective.
How do you see the fact that redemption pressure has increased on other funds, and now investors are questioning the quality of loans or the or the clients to whom the loans have been provided at these rates? Do you think that that's some of the questions that going to be asked, and some of the investors would like to withdraw the money and be safe rather than invested in high risk?
No, I think before we sort of come to that, I think we have to sort of understand how private markets or higher private credit markets in India is really structured. And I think there are a lot of differences between the way private credit actually gets done in Western world in developed markets compared to where India is. So I think first point is that I think India is fairly early, fairly infancy to that impact. The size of Indian markets today in private credit, probably is just give or take 25, 30 billion compared to where you have, say, US markets. Second is, I think, when you look at the transactions or when you look at these deals that are really getting structured, I think there are fundamental differences here. If you look at any typical private credit transaction in India, I think one is that they're all tightly covenanted. There's strong monitorings. They're all asset-backed collaterals, and for that matter, they're all secured lendings, right? I mean, you don't have a concept in India that you really start lending to orphan SPVs, or you lend to the business development companies and things like that. So I think that doesn't exist at all, right? Second point is, I think, look at the duration, right? I mean, in India, the typical private credit transactions will have a duration of 2, 3, 4 years, and on an outer side, inside of 5 years, unlike and slightly more longer duration that you get elsewhere. Third is leverage, right? I mean, you basically in India, you raise the LP capital, you raise the GP capital, and that's pretty much what you invest. You don't have another layer of leverage that you have, that sort of, obviously with levered capital, you amplify returns. But I think in any downside, I think there's a fair bit of structural resilience that it provides. So there's no leverage. So I think if you look at, and fundamentally, we are all closed-ended funds compared to open-ended funds there. So I think I think the people have to understand the way private credit in India is getting done. Early stage, still infancy in the markets, lesser managers, more bespoke solutions. And if you look at the nuances of the transactions in India compared to where it happens in West, whether it's, as I said, it's more secured, collateralized, tightly covenanted, monitored, regular reportings, closed-ended funds, negligible leverage. So I think some of those things are fundamentally very starkly different from where things are globally compared to where India. In fact, if you ask me, I think, India, with all these core characteristics, present a far more compelling investing destination in private credit compared to in some of these markets at this point of time.
How do you look at interest rates in this market? How have they moved in the last 3 months?
I think there is a lesser correlation to private credit interest rates compared to where the normal repos in the economy are. I think because most of the private credit situations are more, uh, probably a need driven, demand driven, and specific situation. So I would say it's less price inelastic, compared to the normal higher grade corporate bonds are. So I think even if yields go up by 10, 20, 30 bips, which is pretty wide, I think it doesn't create an impact on private credit at all. But yes, as I've always maintained, I think whenever there is volatility in public markets, I think the private markets deal flows, private markets deal velocities obviously become more because there's more traffic that comes to the private credit world.
Okay, and Rakshat, last piece is with regard to how you said that with regard to even globally, private credit should not have an impact on India, and even globally, it's concentrated in maybe only one or two pockets. Uh, would there be no ripple effect across asset classes globally, according to you, emanating from this particular asset class? Because this has been boiling or brewing since a while. There are a lot of experts globally which have been talking about bubbles in the private credit space. So you believe that this is an extremely concentrated problem in maybe one or two pockets. That's all.
Again say, right, I mean, I think the asset class had a, probably a very fast growth in terms of the asset generations, and even the capital that got really allocated. I mean, 2 trillion by any standard is a very, very large asset class. And I think, as I said, I think these are very few few of the situations. I don't see any contagion impact. There may be some other situations which may not work well, but I guess I think, most of the managers have these structural protections how to resolve them, and it may sort of lead to slightly more redemptions, but across only in US. I don't see any correlation to that at this point of time in India at all. In fact, if you ask me, I think there will be capital allocation towards more emerging markets, including India, out of this, because Asia generally provides more structural protections. As I said, more family-owned businesses, etc. So compared to where Western world is.
Given that there is lack of regulatory oversight on private credit at this point in time, do you think that are there any risks which are there in the Indian market with respect to private credit?
I would not say that there is less regulatory oversight. In fact, I would say that regulators have done a great job. I think if you look at the amount of reporting, amount of disclosure, and the way the credit funds or generally AIFs are being run, I think they are very, very tightly regimented. And the rule book there is probably as stringent as any other, in normal day-to-day banking loans and with central bank of the country as well. So I think, and with passage of time, as the AIF industry generally, including private credit, is increasing, we are seeing more sort of circulars, more guidelines that gets sort of come out from SEBI, or for that matter, the earlier ones get further improvised to more tighter regime. So I think it's a, India, I think, regulators do a, it's a very tightly regimented thing, very, as I said, very, very tightly reported and disclosed to all the unit holders. So that I think is well covered ground. But I think over a period of time, you will see more circulars, more guidelines, more things under the syllabus, etc. That sort of gets done.
Okay, thank you so much, Rakshat, for coming in and speaking with us. Of course, this has been a very engaging conversation on a topic which we rarely touch upon, where India media is concerned. So we kind of try to get you that perspective. But completely out of time on this edition